Well, at the moment, of course, I have not any specific action in mind, but the point is that authorities should consider what actions could help. We have shown in our blog, publication today that, for instance, the extension of measures like government guarantees on bank loans could indeed provide a significant relief to the banking sector. So if the situation deteriorates, there's one type of measure that could be considered. Otherwise, other support measures could also be part of the picture if need be.
Let's talk about the outlook which you have in mind for loan losses, because clearly we have seen banks making a lot of provisions for loan losses in various magnitudes, so to say. How badly do you think will loan losses develop this year and also next year, I guess?
Well, if you look at the results of our exercise, now I quote by heart, I think that we have under the central scenario, the baseline scenario, let's say approximately 180 billions of losses in the European banking sector, which is quite high. And if you go into the severe scenario, you have 385 billions of losses. So it's a huge amount of losses. As you correctly say, banks have now been taking quite different attitudes in terms of how they estimate the future scenarios and the possible capital trajectory, which is exactly the point of uncertainty that I was mentioning before. So we hope that the scenarios we gave and more clarity into the future developments would make also banks giving a second look at their balance sheet and the possible trajectory of asset quality in the months and years to come.
Is there a likelihood that if there will be a second wave, a severe second wave, and the economic slump will be worse than expected in a way, that you might still extend your recommendation to not pay dividends well into next year?
I don't think it is really an issue of how deep the recession is. The point is how uncertain we are as to the capital trajectories of banks. So if you had even a deep recession, but for instance, you had found a vaccine and you know that there is a way forward and we can accurately estimate what the capital position of the banks will be in the coming months and years, then we would be in a position to differentiate between good banks, stable banks that can pay dividends without any problem, and other banks that maybe need to be more considerate. So it's really an issue of the uncertainty on the future path, I would say.
Here in Germany, we had a severe case of fraud with a fintech doing financial services, Wirecard, which has, I think, has found international recognition. So what do you think needs to be changed in order to prevent such a thing from happening?
Well, I mean, there are a number of things which are not exactly my remit, like, let's say, accounting, audits, and I know that my colleagues at the European Securities and Markets Authority in Paris are doing a review exactly of those aspects. From my perspective, I think that the most interesting question is about the perimeter of regulation and supervision. With new technologies, we see more and more, new companies, new providers of financial services, which are not exactly under the remit of supervision or under a very light type of supervisory scrutiny. I'm not advocating that we should extend supervision to everything that moves in the financial world, but I think we should be very careful to make sure that we have a level playing field.